to Stephanie, and Stephanie can walk us through the integration buyback overview. So Stephanie, I'll turn it over to you. Thank you.
Good morning, everyone. I'm sorry about that little delay. Not a training without some technical difficulties to kick it off. My name is Stephanie Rasmussen. I'm with the Central Payroll Administration. I'm currently an HR specialist. I've been with the Central Payroll for a little over 14 years with various titles along the way. So I've spoken with many of you and helped many of you with a lot of different things. But today we're here to learn a little bit more about the integration / buyback. I'll give you an overview and see if we can help demystify it for you. And here are some of the things that I hope we're going to touch on today. And if you have any questions as we go through, my colleague Christina Ginto is manning the chat for me, especially since I'm working on my phone now and can't see the chat while I'm looking through the slide deck. And also with me today is Tammy Domgren. And is Albert with us today? Yes, he is. Albert's being quiet. Okay, so Albert is also one of my colleagues that also processes the integration and buyback. He is also here, and Christina, Albert, and I are the three people in Central Payroll that process the buyback. So our agenda for today, I already went through the introductions. The first thing we're going to cover is an overview of what benefit integration or buyback is, what your responsibilities are at the department level, what the responsibilities of the employees are, because there are certain things that we need them to do, the role that Central Payroll plays in the process. We're going to go over what's mandatory. We're going to show you how we calculate it. Talk a little bit about the processing time, and then what happens if the employee is receiving catastrophic leave and how that impacts the integration. And then we'll finish off with just a quick review of some key points and some time afterwards if you have any questions that you think of that we didn't already cover. Now, to start things off, we want to know from all of you, what is integration and buyback? We know the answer, but we want to know what you think it is.
You're welcome to go off of mute, or you can put it in chat.
I'll take a shot at it.
Awesome, thank you.
So when a person goes out on leave and they are going to be utilizing their own leave balances, in addition to utilizing state disability insurance or paid family leave, it needs to be coordinated with the state in order for an employee not to receive, or the attempt for an employee not to receive more than 100% of their income.
That was a great explanation.
That was very good. Okay, so the official is that integration of wages with disability insurance or DI and paid family leave, PFL benefits. It's also known as coordination or supplementation. It can help the employee reach their normal weekly salary during their DI or PFL benefit period. Employees can use any combination of their available leave credits together with their claim benefits. And leave credits can include sick leave, vacation leave, other paid time off, and also the short-term or long-term disability plans that are offered by the county. Now, what is important, and John touched on this, is that employees cannot receive more than 100% of their normal salary during their disability or paid family leave benefit period. And it's both the responsibility of the employee and the employers to review the benefit information and ensure that wages are integrated correctly. Now on the department and departmental payroll / human resources side, the responsibilities are to communicate with the employees on how the process works and review the employee's responsibilities with them. Have the employee complete the appropriate authorization / integration forms and forward the completed forms to central payroll. Enter the hours and pay codes into UKG correctly. And it's important to know that any adjustments made after the integration is completed could impact the integration that was done. And we don't always see it after the fact. So it is very critical that the time cards are, whenever possible, done correctly right the first time. The departments need to notify the employees when they return from leave if there's any pending buybacks that are due, and direct them to central payroll if they have any questions that you can't answer. Central payroll will ensure that leave hours paid in excess of 100% of the normal wages will be integrated.
Stephanie, can I ask on that slide, how would the departments know if buybacks are needed?
Check with us. Whenever possible, the employee should already know. And a good indicator is if the employee knows that they were receiving wages from the county and also receiving benefits from EDD or from one of the county plans, or some employees get both. So if they know that they were being paid by both, excuse me, then there's a good indication that there should be some buyback going on. And they can always check with us if they're not sure, or you could. Okay, now the employee responsibilities are to complete the appropriate authorization and integration e-forms. We did make these forms available so that they can be completed digitally. And we're actually in the process of updating the forms a little bit more, and they're just not quite ready today for introduction, but please keep an eye out on Central Payroll's Insight page. And we will get the new ones up on the website as soon as we can. If the employee is not sure which plan they're receiving benefits from, it doesn't hurt to ask them to complete both forms. That way we have them on hand and we know what to do with them. The employee also needs to report to EDD that their employer integrates benefits if they're receiving SDI or EDD paid family leave. The EDD forms, whether they're online or the paper forms, there's a spot in there where they will be asked if they will be paid by their employer, and if their employer integrates, and the employee needs to select yes. The employee needs to ensure that the county has the benefit statements timely. Ideally, the employee should use DHR Risk Management's address as their mailing address on their EDD application. That helps expedite the receipt of the benefit statements. EDD, or what Risk Management does, is they scan those forms and they email them to us, and they forward the documents to the employee. So the county doesn't keep it. We just get access to it quicker so we can start the process.
Can I ask a question, Stephanie, about this one?
Sure.
I don't know if it would be better at the end, but
go ahead.
So in HHSA, we've been receiving feedback from employees that when they put in the overland address as their mailing address, it actually causes a discrepancy on the part of EDD, and they get a fraud alert. And this many times results in a very delayed payment to employees, which could then be a financial hardship for them. And from some employees, they've told me that they haven't received EDD income until like maybe 6 weeks after they apply, because then they have to appeal it. So is there anything we can do about that? Like, I don't know if you have a direct contact with EDD to let them know that it is, something that we ask employees to do to kind of help expedite that process for them.
Stephanie, I can chime in a little bit. We had a situation that came up yesterday. I did talk to the work comp department, the people who are in charge of monitoring the EDD, and they are aware of the situation. They are working on it. So I don't have an update, but they are aware that there is a situation going on. So they're currently working with EDD to figure that out.
Okay, great. Thank you so much.
Thank you, Carly. So another responsibility that the employee has is to seek clarification on the process from Central Payroll Administration directly if they have questions after discussing it with you. So if there's something that they're not completely clear on after going through everything with you, it's okay for them to call us. We would rather have them know than to think they know and to have things escalate because things didn't work out the way that they thought they would. And again, we just like to repeat it over and over again. Central Payroll will ensure that any leave hours paid in excess of 100% will be integrated. Now, the next question I want to ask all of you, who reviews and processes integration/buyback? Feel free to unmute and chime in or drop it in the chat.
Looks like we're getting some good steady answers there, Stephanie.
I think they've been listening. So we like to make sure that everybody knows that it is Central Payroll's responsibility for calculating the hours to process and to integrate the time on the employee's paycheck. So that part is not on the department. That's on us. So the mandatory integration/buyback for EDD disability benefits, the integration or buyback of sick leave balances used is mandatory. If the employee uses their sick leave, EDD requires us to do the buyback integration process. Vacation and comp time integration is voluntary. However, vacation and comp earnings must be reported to EDD, and not integrating these earnings may result in a denial or delay of benefits, reduction in benefits, or an EDD benefit overpayment notice. For the employees that are receiving Lincoln and MetLife benefits, if leave accruals are used, integration is mandatory when the combination of benefits and earnings from paid leave exceeds 100% of the employee's normal salary. Now, again, I know all of you were listening because all of you answered the question earlier, but only Central Payroll Administration performs the calculation and posting of hours to be integrated. So here's how we calculate it. An example is the employee's current wages before taxes and deductions. Their weekly wage is $500 with the county. The weekly EDD benefit amount from disability or paid family leave is $275. So the way we perform the calculation is 500 minus the 275 equals 225 per week in excess wages. The maximum integration amount of $225 per week in gross wages allows the employee to receive 100% of their normal weekly gross pay. Can anybody tell me where this integration goes?
Yay, Linda.
All right, that is correct. When we process the integration, the accruals go back. So central payroll administration, what we do is we convert the gross dollar amount into hours that can be integrated. And in this example, the employee's hourly rate is $15 an hour during the disability or paid family leave benefit period. So the calculation would look like this. It would be $225 divided by $15 equals 15 hours to integrate. So when this integration is posted to the employee's time card, the employee's gross wages in the pay period it is processed will be reduced, and the integrated hours will be returned to the employee's available leave balances for future use. Now, if there are any hours to be integrated and the employee is in a paid status, integration of benefits should begin as soon as benefit statements are received and calculated by central payroll. But if the employee is on unpaid leave when the statements are received, the integration will begin when the employee returns to a paid status. If the employee receives catastrophic leave donations and any disability or paid family leave benefits combined exceeds 100% of their normal salary, integration will occur. If the employee is on leave, they will be able to reuse the donated hours that were integrated. But if the employee has returned to work, the integrated hours, sick leave and or vacation that were originally donated to the employee will be returned to the donors instead of being restored to the employee's leave balances. Now, quick review. That went quick. For SDI benefits, integration of sick leave hours is mandatory. Integration of other accrual balances is voluntary and must be reported to EDD. Not integrating paid time may impact EDD benefits or result in an EDD overpayment notice. For Lincoln Financial, integration is mandatory for any leave balances that are used and that result in excess wages over 100% for the benefit period. There are several factors that may impact the start and flow of the integration process, such as timely receipt of EDD benefit statements and the employee's pay status. Integration results in a deduction in the employee's county paycheck and the integrated accruals being returned to the employee's available leave balances if they're not on catastrophic leave. Integration is processed only by the county's central payroll administration. And that's it. I'd like to open the floor for any and all questions. Just be nice.
Stephanie, I have a question. It's more like a scenario though, I
Okay.
think. So in an example, and maybe you could walk me through, because we get questions a lot of times from employees. They say, I went out on a leave and all of a sudden now I've returned to work and all of my paycheck is gone because of this buyback situation, or my balances. I don't know what, like, all the details of how it came to be. But in a typical scenario, like when I try to make sense of buyback, I'm thinking, so an employee goes out on leave and they don't know when EDD will start paying, right? So they go out, or our voluntary plan will start paying. So they go out on leave and they're burning through maybe 40 hours of sick, 40 hours of vacation every pay period, right? Because they're not getting paid yet. Then all of a sudden EDD or the voluntary plan kicks in and they're getting 60% of their salary. And I don't know how common, if that's like a typical sort of scenario when an employee goes out. So all of a sudden now they're making 160% of their salary. So then on your side, Stephanie, are you then sort of taking back that time, because they can't get 160%? The employee got overpaid at the beginning of their leave. Now they're returning to work, say 3 or 4 months later, And when they're saying that they don't even have a paycheck anymore, is it because they're paying back all that time now that they received 160% of their salary? Is that sort of the situation that some employees run into?
Yes. So that is what we see a lot, where, you know, EDD is behind on processing the claims or on approving the claims, or I don't think Lincoln's really behind. I don't know what their time turnaround is on approving the claims, but it is pretty common for people to be on leave for, you know, 2-4 weeks using only their accruals from the county before they receive something from EDD. And then at that point, we have to, you know, fix what's already happened, because there wasn't an overpayment until EDD paid them.
Right. And so in that scenario, which I think is the one usually where then the employees are confused and they end up coming to maybe their DHRO or to us, because by the time they come back to work, they're out of hours now. Maybe they burned down all their hours. And so, Stephanie, what's communicated to the employee, then we tell them, well, you shouldn't have used that 40 hours right up front because you were getting paid. And then if you don't have that time left now, you owe it back to the county. Is that how it works? Does that happen? Because I mean, we get employees sometimes and they say like they owe all this money back.
So it's important to remember that the employee has to be in a paid status for us to do the buyback. So
Okay.
if the employee completely exhausts their leave balances before we get statements, or if they exhaust their leave balances before we get caught up on, you know, that backlog, that because EDD took a while to get them the statements, or because we didn't get them timely, for whatever reason, it's happened for a myriad of reasons. But if the employee exhausts their leave balances and go on an unpaid status, then the buyback has to wait until they have a paycheck again.
So that's exactly okay. And that's when the employee then is angry, right? Because they come back to work and they owe for their premiums, and now they owe for that time. That
right.
makes sense. Okay. And then they're angry.
Yeah. And I kind of try to, I don't know if I can officially recommend that, but usually what I tell people, if they're asking me if they know they're going to be using their leave balances while they're waiting for EDD to kick in, we know that they cannot receive more than 100% of their pay. So I usually try to just say, you know, if you don't have to use it, try to hang on to whatever EDD sends you, because that's going to be what you're going to need to live off of while we're doing the buyback from your paycheck. That's what's supposed to make you whole. And I know a lot of people, they go, oh, I have all this extra money because I've got my full paycheck, and then I'm getting money from here, and then I'm getting money from Lincoln, and they spend it, and then they come back to work and we have to do the buyback, and then they have a financial hardship because they didn't realize they need to hang on to something.
Yeah, I think Jonna has her hand up.
Thank you. No, I was going to say exactly what she said is, you know, when we have, as DHROs, when we have those conversations with employees who are going out on leave, you know, part of that conversation is to see if they do have voluntary short-term disability. Do they pay into SDI? And if they do, really, it's not just handing them the policy and the forms to fill out, but it's explaining the process of what it looks like. And so part of that explanation includes like, hey, you're planning on using your leave balances, which gives you your normal paycheck, and you're filing for SDI, you're essentially getting double paid. And so we recommend to them like, hey, we don't spend that money that EDD sends you until you start seeing the buyback process come back out of your paycheck. So then that helps you kind of strategize and plan, you know, financially ahead of time. You know, so that's part of our conversation, and it's a best practice, I think, for all other DHROs, like when you're managing that leave. about having that conversation of, hey, you're going to get double paid, at some point. But certainly everyone's situation is different depending on what their leave accruals look like when they go out versus, if there's a new employee who has to suddenly go out on, let's say PDL or something like that, and they're filing for disability right off the bat with no leave balances. So it's kind of doing a little bit, we could be a better resource to our employees if we just do a little bit of research ahead of time and understand that it's a complicated process. My own side question to follow up that is, some of the things that's frustrating on our side as we're trying to help provide information to our employees is we have no idea when central payroll receives those statements from like SDI and when they're planning on processing them. The very few times that I've been notified is because I had an employee in my office just about every day saying, when is this happening? When is this happening? And, and they're providing me the statements so that I email it into central payroll because I don't, it seems like that's not always working, is that EDD isn't always sending it to central payroll. So that's my question.
EDD only sends the statements to the county if the employee uses the county's address, which I understand from what Alex was saying that sometimes that causes issue with the employee. The statements don't come directly to central payroll though. The address that we ask employees to use is for DHR risk management. And then they receive it, they open it and they scan it and send it to us. And then they forward the documents to the employee. So I'm not sure if for some reason we're not getting a forward or if the employee is not using that address. I couldn't say. But once we have them, we calculate and get things started as quickly as we can for the employees, especially if we know that something's going on. I do want to note that if the employee does come back and they are having a financial hardship because of the buyback, if they contact us, normally what we try to do is we try to like hurry up and get the buyback done as soon as possible so they can get back to the normal paycheck. But if that's causing trouble for them with their bills, please have them reach out to us and we'll try to work with them on that. That is important to know. And if there's, sorry, I'm reading a question. If there's, you wanted to know if there's a way that you can tell when there's a buyback occurring. The best way to know is to see the paycheck or to reach out to us and ask us when we're going to start it, because usually we know if we have the statements and if we've had a chance to do the calculation yet. And that also allows for a moment where if I have a statement and I haven't had a chance to calculate it, if you could say, if the employee is in a hurry to get it over with, hey, and we get a move on this. So we've had a lot more buyback cases, especially over the last couple of years. So sometimes we don't have the calculations like right now, like we used to. So sometimes it's not quite so fluid. So
Stephanie, can we get to one of the other questions, or not questions, but there was one comment in the chat from Raylene with child support. She said maybe she had a best practice to share regarding the topic we were discussing.
No, mine was the same as Jana's.
Oh, okay. Okay.
Yes.
I thought if there's another best practice out there, that would be great, because we hear from the employees too. And it's very unfortunate when the employee comes back to work after being out and, they're angry and now they don't have much of a paycheck. It's so unfortunate. So
yeah, we do that
can...
same process though.
Okay. Someone else has their hand up. I can't see who because it's just over the bubble, but there's another hand up. Someone else have a question?
It's Maria Pilar.
Yes,
Maria,
hi, good morning. Yes, so I was just wondering because in the past, normally the buybacks start taking place around, just to put a number, around 6 to 8 weeks in. That's when we used to see the buybacks. And now the employee has been out for a couple of weeks, comes back, and nothing has happened. So that's why I asked earlier, is it something that SDI is not forwarding the statements? Because I know that once we submitted, I asked the employees, can you please forward us your statements so we can follow up with central payroll? And then payroll is really quick about it. It's like I submit the forms and within a few days, everything is taken care or the integration starts. But I've noticed that it takes actually us to initiate that process because it seems to be there's a disconnect between I don't know if it's risk management or it's a state not submitting the forms. And the reason I'm asking is because I'm always worried about those staff members that are leaving us. And the integration could have taken place. I have one right now. She returned in December. We're now in February, and she's just asking me right now, hey, is my integration complete? And when I look, I'm like, it never started. So it's like, where's the disconnect there?
That is a good question and one that I don't have an answer for, because as soon as we do have the statements, we do start the buyback as soon as we can.
Right.
Yeah, and I can certainly check in with risk management too. I know they're very timely though on turning everything around because they have different state mandates and timelines and fines associated with every step of their practice and all their processes. So I know that they turn them around quickly too, but I can find out from them what the turnaround time is.
They usually send us something every day.
Yeah,
So
I know they move through all their mail and everything very, very quickly. So it could be a delay on the state side. I don't know.
Yeah, and like I said, I'm not it's just I've noticed that it takes a long time. And also even getting the paperwork from SDI, what used to take about a month is now taking it takes longer. So that's why I'm kind of like wondering, is there something that could be done faster, or could the county do it online instead of waiting for SDI to send us paperwork? Could we have a portal where we just check in and just complete it online to speed up the process?
well, the county does not file anything on behalf of the employee. And we don't have access to anything regarding their claim. So there's nothing that we can do on their behalf there. And I have heard from several employees that the state has been backed up. They've had a lot more claims and less employees. I don't know if that's still a case for them, but I have heard that they're taking longer to process the claims and get those payments and statements out. But on our end, there's not anything that we can do. We don't have like an inside contact. In fact, if we try to call EDD on an employee's behalf, they won't talk to us because these are disability claims, and there could be medical information that the employee might not have given permission. Yeah, so EDD just they don't talk to us at all.
There was a comment about, can the department be notified when integration starts? And I think Christina answered saying, yes, we do notify departments. How are they notified?
Typically, personally, when I'm processing, if I'm getting a new statement and it's a brand new file and this person is still on leave, I usually just automatically go in and start it. If it's somebody that's been out for a while and they haven't had their buyback, then I usually reach out to whoever the contact in that department is and let them know, hey, I'm going to be starting the buyback for Joan Smith. She's been out for a while, or she just returned from leave and now she's back in paid status, so I have to start the buyback again. So I try to email the departments or send a message in Teams sometimes if I know they're online and it's the very end of the pay period. So hopefully the departments, when we do that, are able to reach out and contact that employee to let them know to expect that little bit of a reduced paycheck. can't say a little bit because it's going to vary.
And is there a threshold to how much is deducted? Is it 50%? Is it 60%? Do you do 100% of their paycheck? Is there a threshold that they can say this is how much they deduct each paycheck?
Not really. We try to, like I said, deduct as much as possible, but we have to be mindful of the other things going on with their paycheck. So the other deductions, you know, their county benefits and retirement deductions, SD Sarah, all of that has to come out first. So we have to look and see what it looks like is going on there and used our judgment to calculate how much we think can come out of the paycheck. So, and even that is going to be different from person to person, depending on their paycheck, their county benefits, if there's going to be a benefit adjustment that's going to impact their paycheck.
So it sounds like we take out as much as possible on each check, that there's
We try to take out as much as possible, but if, and that just gets into the technical side, if we try to go too high of a number, so if we try to say, okay, I want to take 60 hours out of this person's paycheck, if the PeopleSoft team is running payroll, and that's for somehow puts the paycheck in a negative, it's going to cause an error. And then it causes a little bit of a headache to fix it. But basically they'll adjust it until the paycheck's not negative anymore. And then the employee won't have much of a paycheck there and we'll have to go back and correct it.
Thank you.
You're welcome.
Thank you. Did we get to all the questions in the chat?
I think I saw a couple hands come up, or they could have been clapped. I couldn't tell on my phone.
Stephanie, I have a question.
Yes.
My question is regarding the voluntary short term, the PFL, because I know the protocol for SDI, as far as you know, we notified, we tell the employees that they should be putting the 5530 Overland Avenue so that the pay statements can go directly to Central Payroll or whoever it is that goes to in DHR. But as far as the voluntary short term, what's the protocol there? Because I know we've had a couple of employees where the issue is that it seems like it's taking forever for DHR to do any kind of buyback. And I know one of the employees was communicating with Lincoln Financial, and they weren't sure how the pay statements are getting over to DHR, because, you know, since this is such a new process, we don't understand how the pay statements are getting over to DHR from Lincoln Financial.
So for Lincoln Financial, we receive reports that are kind of passed along the line. So I don't know exactly how long they take to go from Lincoln to our friends and benefits and then to us. But I'm not aware of any long time periods in processing all of that.
Yeah, so Lincoln is sending the reports on a bi-weekly basis, and Central Payroll is receiving them at the same time we are. And they're processing fairly quickly, so I don't know what the delays would be in the buyback. I don't know how soon you guys start processing after receiving, but they should be coming to you guys bi-weekly.
Yeah, we do get those reports. So we're processing those as quickly as we can.
Okay, thanks.
And I see in the chat, a lot of people are asking who in their departments are being notified. So I don't know if there's a list or something that may be able to be sent out after the meeting so people know and can correct or make sure that you have the right contacts for the department. Maybe that'll help.
Yeah, it looks like library was asking. I think sheriff had their question answered, though, who is being notified. But yeah, if there is a list, Shonda still has her question pending, who in the library is notified.
So for most departments, unless we're told otherwise, we're going to reach out to the person that is on our payroll contact, the fruit salad list that we call it, unless we know otherwise. So we know HHSA has a designated leave coordinator. And if we're aware of one for the other departments, we will reach out to that person. But otherwise, we're going to go to whoever's on the payroll contact list that we have. So if you have a specific person in your department, please let us know, and we will do our best to focus on the person that can actually help with it.
Thanks.
Okay.
And then
Of
Linda
course.
has a question. When employees are on leave, does the buyback accrual go into their account immediately, or do they appear when the employee returns? Employees want to use them while they are on leave.
If I process buyback for an employee that is on leave and still in a paid status, they would have to be, if I'm processing buyback, those accruals would go back into their accrual bucket as soon as payroll is processed. So if I post it for the current pay period, they won't be able to use those balances until next pay period. But they should not have to wait. I don't know of any scenario where they should have to wait. Not until they come back.
Thank you.
You're welcome.
Okay, we have just about 5 minutes left, and I'm hoping, well, first, thank you, Stephanie. This was very helpful. We appreciate all your time, and Tammy for putting it together and working with benefits so we can host this roundtable in partnership with Central Payroll. I hope it was useful for the DHRO community, all of you who took the time. I know everybody's really busy, so thank you for taking the time to be on the call with us today. Any ideas for future topics, for future roundtable? Are there any ideas or suggestions for topics you would like to see if we did a roundtable, say every 3 or 4 months? Any different topics that you would enjoy that would be useful to you?
Explaining how the long-term and short-term disability work together. That would be a nice topic, Elaine.
Okay. That's one of my favorites. Yeah, we could do that. Okay. I'm just looking through the questions.
It's Shauna. With retirement season coming up on us, I know I'm getting bombarded with questions about like the COBRA process and CalCOBRA and when it may be applicable and not applicable, as employees are planning on retirement. So kind of hearing a little bit more detail about what that process and what things are included and are not included would be really helpful for us, when we have these retirements come up.
Okay, that's great feedback. Yeah, I will see. So if we were doing one for COBRA and retirement, it would be most useful next month though, right? In March. So we can see. We'll see what we can pull together. Yeah, we're getting ready for that as well. Is lots of employees getting ready to retire. So, okay, that is helpful. And I just had one more question since we have 3 minutes, just because I'm reading through some of these questions, and one of them, SDI is not subject to state tax. So isn't PFL subject to state tax though? So disability, that's what always confuses me. So the disability side is not taxable, but the bonding or the family leave, the PFL side is taxable, both state and federal, correct?
Correct.
Okay, PFL is taxable, disability is not. And is unemployment taxed? Unemployment is taxed. Okay, so the only thing not taxed is state SDI. Okay, and our plans on the disability and paid family leave, you pay the taxes on the premiums. It's an after-tax deduction. So you pay the taxes up front, so you're not paying taxes when you receive the benefit. So it's a little bit different. Okay. So